Hey, what's going on, investors? EBS Invest here, back with a brand new video. Today, I will be talking to you guys about one railroad stock that I think is a little underappreciated. You always see people talking about Union Pacific, or especially recently Norfolk Southern with their derailments. I want to talk to you guys about a stock that I firmly believe in, and I also kind of have like a personal story connection to the stock as well. Today we're looking at Canadian National. You can see in the dark red, this is Canadian National track. So Canadian National operates in a duopoly setting in Canada. Then in North America, it has a smaller footprint, but still significant. They have a monopoly access to Port Rupert up here on the west side of Canada, and they operate from east to west all the way along Canada. They also have almost a monopoly on the Great Lakes. They're able to ship around lots of materials and other needed goods transporting between the United States and Canada. You can also see that Canadian National has a strong presence along, looks to be like that Mississippi. So they're able to transport all the way from the Atlantic over here in the Pacific to the Gulf of Mexico and the Great Lakes. So lots of areas to ship things around. And for those that don't know, railroads are one of the most efficient ways of shipping products around. They're 5 times more efficient than shipping with a truck or ship or other means. It just costs less per how much weight they pull, and they also are just a great way to ship product around, and it's also pretty efficient. So we're going to be looking into this stock, why I think it's a little underappreciated, potentially undervalued, and also a little personal story, which we will touch on in a little bit. Going over here, I'm on the Canadian National Investors site. This is what one of their trains looks like. It's a very, very beautiful engine, and looks to be probably in the Canadian Rockies or some type of mountain range. They recently got a new president and CEO, Tracy Robinson. Their last guy stepped down, so it's kind of cool to see some new leadership. You can see that everything is going well to plan. They had great EPS reports. This year they're expecting lower EPS, that's earnings per share, that are new. Overall, you can see that they're increasing their car velocity, which is an important metric. Their injury rate is going down, their accident rate, their train performance has been increasing. And you can see revenue per ton of miles, $60 billion, that's up 6%. Quarter 4 revenue is up 21%, so $4.5 billion. And looking into 2023, they see softening demand, an increase in coal and grain production, looks to be stabilization in fertilizer, automotive, and petroleum, and a decrease in forest, metals and materials, chemical, plastics, and international and domestic. I want to go over here onto the stock analysis page. You can see on the max, this stock is up 5,900%. This stock has outperformed the S&P 500. On the 5-year, it is up 53%, where the S&P 100 is up around 40%. You can see that they offer a 1.8% dividend yield, about $2.16. They recently increased their dividend by 8% in their last earnings report. Their PE is a little bit higher, about 21.7, but I personally think that it could be a good time to get in. We'll talk about that a little later. But you can see they have a market cap of about $80 billion. So this is a fairly big company, guys. It's not a small. This is what they call a Class 1 rail. It competes with Burlington Northern Santa Fe, CSX, Norfolk Southern, Union Pacific, and the only competition they have up in Canada, what I mean duopoly, which means two, is they compete with Canadian Pacific, that lighter line, that lighter purple. And they share some rail track, so some track is shared, but it's owned by Canadian National. So they have market power in that, and they charge rent. So they're able to just make money, charge Canadian Pacific to use their tracks, which is kind of cool. And overall, you can see that they analyze this as a hold. Going over to the forecast data, we're not going to get too nitty gritty here because I recently got resubscribed to Track Your Dividends, so I want to show you guys that side a little bit more. But they say they expect about 5% gain, a high about 25%, and a low about 25%. But you can see they're projecting revenue to increase, earnings per share to increase as well. Going over to track your dividends, that's where we're going to spend most of the time in the analysis today. You can see that they're increasing their dividend consistently, right? It's growing nicely. Overall, you can see it gives a dividend score of 94, which is out of 100. Really solid performance. On the dividend page, you can see the payout ratio is good, EPS trend good, dividend yield good, consecutive dividend growth also good, and dividend growth rate very good. Last increase about 9.8%. And look at these payments, 82 cents, and now we're all the way up to $2.26 in a matter of a few short years. On their competitor analysis, you can see Canadian National has the best score of 94, followed by Norfolk Southern, which personally I would avoid. That company is going to be in a lot of turmoil. CSX, and then a lot of people like investing in Union Pacific. I'll talk about later why I chose Canadian National. Union Pacific, they got a new CEO if you want to look into that. But when I tell you guys my personal story, I may have been a little biased in picking this stock, but you'll understand why. Going over to the valuation, they expect this stock at about $167 a share. Analysis, they expect this as an overweight. Looks to be that a little bit on the buy side, but also a lot of hold ratings. Going over to the chart, you can see that they're increasing their profit margin consistently, a little bit flat, but has been increasing since 2003. Capital allocation, since 2020, they have been increasing their return on equity and capital employed. Look at their earnings. Beautiful graph. If you were to draw a line, it would just go up and to the right. That's what we like to see in stocks, right? You can see that they're increasing their sales, they're increasing their earnings, and that's overall what we like to see in a stock. Their cash flow, this is a cash flow generator, right? Railroads make a lot of money, believe it or not. And just look at this cash flow, increasing, a little bit of a decrease in 2022, but although they have had decreases, it always bounced back. So this is a cash flow, earnings, and sales generator. You can see their net debt hasn't decreased and their current ratio is down. Now, I told you guys I'd tell you guys a personal story. My brother was a railroad conductor and also a switchmaster and a brakeman for Burlington Northern Santa Fe. He also worked for a few smaller regional railroads, which I won't mention, but he has a lot of experience in the railroad industry. He's 9 years older than me. I look up to my brother fondly. He told me, and this is something that's very important to me, when he worked for Burlington Northern, it was a very mismanaged company. They'd send him places that weren't required. The company would waste money on transportation. And one thing about the railroad industry that people don't understand is it's an extremely mismanaged market, right? You have what are called managers, and then you have the workers. Managers, they grab these kids out of college. They don't know anything about how to work railroads, and they mismanage the company, right? And the workers end up footing the bill. If you do research, there's always union strikes. Recently, there was a big strike, I believe last fall, where Congress had to step in and help settle the argument. Railroads are not a pretty place to work in. It's a dirty job. Some people don't like it, and there's not a lot of workers, so they pay the workers compensatively. But because of that, the work is awful. My brother would get called at 3 a.m. to go work. He'd get called at 5 a.m. So when you invest in these companies, I always tell people to be ethical and smart in your decisions. My brother told me from his connections and working for a little bit with Canadian National, he told me that they treat their employees the best out of any rail. And if you look at UNP recently, you can check out online, they're ranked the worst employer in the S&P 500. This company treats their employees awful. They don't care about their employees. And being in the railroad industry is tough. But Union Pacific and other rails like Norfolk Southern cut safety corners to increase profits, to drive revenue, and Canadian National is one of the only stocks that I could find in the railroad industry that treated their employees well, didn't cut corner, took safety very seriously. And although it's not perfect, right, there's still going to be union strikes. Out of all the rail I wanted to get in, this seemed like a stock for me. So that's kind of my personal story. I wanted to make that clear, that railroads are, although they are an ethical business in terms of what they do, sometimes the employers are pretty unethical in their means. I mean, one time a guy had to miss his wife's funeral because Union Pacific forced him to work. So that's just not cool. So I wanted to make sure I invested in a high quality, ethical company. And I believe that this stock, with its growing revenue, with its growing cash flow, increasing profit margin, increasing velocity on cars. Overall, I think this is a great stock to hold. Going over to my calculator, I put in the earnings per share. I applied a 7% growth rate through my research on Yahoo Finance as well between stock analysis. 7% may be a little on the mid-high end. They're probably not going to grow very much 2023, but obviously in the long term, right, guys? I mean, this stock will always in the long term go up. There's always increasing demand for products to get shipped around. So we get a intrinsic value about $134, acceptable buy price about $107. So this stock is currently trading at about $118 a share. So maybe a little bit overvalued above your buy range. I recently did buy a share of this company. I wanted to get in, and I will eventually accumulate more shares. I wanted to get it before its ex-dividend date. But I really do believe that everybody should have a rail in their portfolio. And if you are going to own a rail, just be ethical and mindful in your decisions. Make sure that you're owning a company that doesn't hurt the people that it works for. And I try and own high quality to ultra quality companies, and I believe this is one of those companies. Increasing their dividend, increasing their earnings and sales. They treat their employees well compared to the competition. It can't all be perfect. And overall, it looks to be like a nice stock that beats the market, and I'm very happy with it. I hope you guys enjoyed this video. Please leave a comment and like below. If you have any criticisms or any support, leave it down below. I'm always open, and I appreciate you guys watching this video. We have Track Your Dividends software back, so that'll be nice to have going forward as we look at other stocks. Overall, this stock operates in a duopoly setting, has lots of market power, and is able to increase its revenue and earnings nicely. Take that as you wish. Have a good rest of your day, guys. This is EBS Invest. Peace.